Okay. Welcome everyone here at this EIB Benelux Pavilion for a conversation on, can you hear in the microphones? Yeah? Perfect. Unlocking the potential of green and innovative technologies, stepping up financial tools to scale up technological innovation. I'm your moderator. My name is Lee Beck. I'm a Senior Director for Europe, Middle East, and Africa at the Clean Air Task Force. For those of you who don't know us, we're a global climate organization focusing on overlooked solutions. And to be frank, this conversation here today is near and dear to my heart. When the EIB asked me to moderate this conversation about finance and innovation, I got really excited, and I'm even more excited about the stellar panelists we're going to have in actually two separate sessions. And I think the goal of this conversation today is really to peel back the layer of the onion on both finance and innovation. Think about the different stages of innovation, R&D, lab, pilots, at-scale deployment, as well as the different kinds of capital and finance that are required to advance. And so in our first conversation, we're going to zoom in on Europe, where the scene is, of course, framed by the recent Draghi report, which said, basically, we have to be competitive to be green, not necessarily green to be competitive. And then actually we'll have a second panel where we're going to dive into Europe's role into the world, and how we can scale technologies globally. So first up is a keynote discussion from Ditte Juel Jurgensen, Director General of DG Energy, and then we'll dive into the panel conversation. Ditte, you're up.
Thank you very much for the kind welcome. It's really good to be here and good to be working with the European Investment Bank on helping to bring forward the green transition and to ensure that we do it in a way that also strengthens our competitiveness. So the current context in Europe is one where we see our competitiveness and our industrial capacity under challenge, not because of the green transition, not because of the changes we're making in our energy system, but because it is difficult to get it right in terms of the sequencing of investments and getting the right levels of investments. Very, very significant funds are needed. Also because it requires very, very close cooperation cross-border, again, to do it in the best possible way and reduce the system costs. And so in that context, our partnership with the European Investment Bank and the instruments developed are absolutely critical. We know that in order to achieve our goals for 2030, we're going to need around 600 billion euro of investments in the energy sector alone between now and 2030. We know that there is significant funding, significant financing available in private financial markets, but that the investments are currently not going where they need to go. And so in our work to put forward a clean industrial deal and a package on energy affordability, we do need to look at what is holding, what are the bottlenecks, what are the challenges to bring the investments and financing out there. And I would like to point just to a few of them here in my opening remarks before we go into the conversation. Now, first of all, Europe has been a leader in green technology, in offshore wind and wind energy, and in a number of the related technologies, a leader in cable manufacturing globally. And we should keep that leadership, and that requires innovation across European markets, across the European industry, as well as cooperation with partners. We know from the International Energy Agency that about a third of the emissions that we need to reduce will come from technologies that are not yet available or not yet sufficiently developed to provide the greenhouse gas reduction that is necessary in a cost-efficient manner. So innovation, research and development is necessary. We use our Horizon Europe Research Fund to make sure that the investment focuses on the green transition and delivers to that. Now, a second aspect is how do we then scale up and bring these innovations to the market? And there we can see that some of the capital market challenges in the European Union need to be addressed so that there is investment and financing available for that scaling up and for bringing those to the market. The venture capital market in Europe is far less developed than elsewhere, and there is a risk that some of this innovation is simply disappearing very, very quickly because there is venture capital available, for example, in the US and in other markets. So we actually lead the way in research and innovation support. We lead the way in patents and green technologies. But when it comes to the scaling up and bringing it to the market, there we're lagging behind, and we need to act on that. We need to mobilize capital more effectively to bring that to the market. Another reason, the third point I want to make, is that while there is significant private capital out there, as I mentioned, it does not go into some of these green technologies and green innovations. Now, one of the issues seems to be that there is either a risk or a perception of risk that we need to work on. Now, we need to make sure we have the relevant de-risking instruments. That can be financial instruments, guarantees. It can be our work with the European Investment Bank in terms of the financial instruments for de-risking. But de-risking starts with the markets and with the regulation. If you're not sure whether there's going to be an offtake for the green hydrogen that you're producing, you're not going to produce it in the first place. So offtake guarantees clarity and certainty for what is the market out there, who are the buyers. Similarly, the regulatory environment is absolutely critical. If there is a credible target for achieving a hydrogen market, for building a hydrogen market, for achieving a renewable energy goal by 2030, now that target in itself can help de-risk and drive investments. But there has to be certainty and trust in the targets and goals and regulation we have set ourselves. So that regulatory predictability, that regulatory clarity is another key aspect. Now, regulation and predictable regulation is necessary, but sometimes regulation risks putting in place more hurdles to overcome. If you look at the field of permitting and licensing for investments, then that simply takes too long in the current environment. We have done a lot to accelerate permitting for renewables and for grids and for energy infrastructure, but we can do more to make sure that those improvements actually bring results on the ground. So de-risking, both financial de-risking instruments, but also regulatory de-risking instruments, is an absolutely essential part of it. So those were some of the points I wanted to make in my opening remarks. I look forward to conversation also with you from the European Investment Bank. But we have had a very, very close cooperation around building the new instruments, the counter guarantees. The wind power package was a really, really good example where it has taken off and had a real impact on the ground. A success story that we can hopefully emulate in other green technology sectors, including in relation to grid and energy infrastructure where more investment is needed. Thank you very much.
Please. All right, we're going to dive into the panel now, and we have here Jean-Christophe Laloux, European Investment Bank Director General of Operations, and Kirsten Dunlop, CEO of Climate Kick. And now, actually a really exciting conversation. We have a second panel afterwards. Because I think what we now have represented on this panel is the biggest multilateral bank in the world, the biggest climate bank in the world. But Kirsten, you and the data and really the insights from startup to technology acceleration, you with the policy side. So I hope we can really get granular on how this innovation happen in the European context from the lab to the market. So Kirsten, I want to start with you. Can you give us a little bit of an overview? Where is Europe right now? How are we doing?
That's a big question, especially given last week. So I think from the perspective of innovators, not so well. Europe is not an easy place at all to develop and sustain and scale up an innovative solution. From the perspective of specifically access to finance and coherent, consistent, sustained momentum through the entire development life cycle, that's where I think we have some of the biggest challenges. On the other hand of that, Europe is an environment that has constructed some extremely bold market-making initiatives that are policy-framed and policy-led. And I'm thinking specifically of initiatives like the missions, the European Cities Mission. I'm speaking about that because Climate Kick is responsible for orchestrating that have all of the elements more or less there to do really significant lead market generation, which would then construct real economy scale-up possibilities for leading solutions, and in this particular case across almost every major high-emitting sector where there is a need for transformative alternatives. So the entire built environment and construction industry, the transport industry, the energy system, water, waste, and that then extends into logistics, food, and so on. So there is an interesting duality between policy initiatives that create a market-making dimension, structuring, clear directional signal about the timeframes, 2030, clear structured information about the emissions needed to be removed or reduced or eliminated, very clear investment plans with actually rather high 32%, 30% on average expected return on investment, initiatives in partnership with the EIB like the Capital Hub. But the reality, if you come back then to the single innovator on the ground, is that it is very hard to access finance that is ready for early stage development. There is still a massive gap between, if you take an innovator perspective, between finance sufficiently risk interested, agile, minimum kind of tax on effort and cost in terms of regulatory requirements, clarity of requirements, to be able to get a forward-looking solution such as you were referring to, not a kind of retrospective, this is a substitution solution, but this is the kind of solution that feeds into the next generation of economies. It's very, very hard to find a depth of market in financing that has all of the appetite and is willing to go the journey. And then the other side of this question, for cities, you have public authorities very limited in terms of their lending capacity, in how much risk they can take, very hard for them to engage in agile ways with solutions providers. So this is a kind of a bit of a Mexican standoff still in Europe at the moment.
Thank you, Kirsten. And I want to go to Jean-Christophe because Kirsten just it's very hard to find the depth of market. Maybe you can tell us a little bit more. And I know that EIB is involved in the whole life cycle, but really in response to Kirsten's perspective, what your main efforts are focused on right now.
Yes, and before I just address your question, there's one more thing I would like to say about where Europe is, and I will come to this not from the policy angle, but from the market angle and what I hear from the people that we work with. In this particular instance, a Danish company, one of the leading Danish companies in the cleantech sector, a fairly large company, and we were in a panel in the Financial Times in London about two weeks ago, and he was evoking his experience with the European instruments, and he said, you know, as the CEO of my company, when I had to access the Innovation Fund, I had 200 pages to fill in of application, and it took a lot of people and a lot of efforts. And to achieve the same result, I had only an 8 pages form to fill in the States to access the IRA component. So this is also where we are at it, and I agree with you, but we are suffering in Europe from a problem of access to some of these instruments. I join you up in this, and not the least because of a lack of simplification efforts, and I know that Dieter will probably agree with me, and we are working on this, but this is one of the elements that we suffer from, not only from fragmentation. So what do I hear from the people who are working with us, and what do they say about the difficulties that they are having? I hear essentially two things. The first one is, and you see that in figures, 80% of seed rounds and A rounds in the innovation, and in particular in the cleantech sector, but in the innovation sector, are financed by European equity venture capital players. And then when you take B rounds and afterwards, the proportion reduces gradually to 50%, and then when it comes to very late stage finance and pre-IPO, well, we're pretty much wiped out. The number of cases we have of companies that we have supported with the venture debt investment, and venture debt, for those who are not acquainted with it, is some kind of a debt instrument, but where we take the whole risk of the business plan of the company. So You need to repay it after 5 years, but there is no interest payment in the meantime, and the remuneration is actually based on the success of the company in executing its business plan. Full remuneration with an equity component to it. So what I hear from the companies, and we have about a portfolio of about 300 companies that we have financed across Europe with the type of instrument. So young, innovative companies. What do they say? And what do we see? They say two things. One is we have a real difficulty to access scale-up debt, and Dieter talked about it in her introduction. And when we do, it's Chinese and American investors. So we have a real issue in Europe in finding investors who can indeed invest throughout the whole life cycle. So starting with seed finance, do the first rounds of finance, but then remain a lead investor throughout the later stage and growth finance of the companies. And the few mechanisms that we have are generally not lead investors. They're trailing investors. They say, and one of the instruments that we have inside of Europe say, okay, we'll co-invest if there is someone else being the lead investor out there, right?
Wait, why is this? Do you know why? I mean, why do Americans
Because-
and Chinese have to come to scale European technology?
Well, first of all, we don't have enough equity providers, European equity providers with deep pockets. And, there was this idea out there, and I know that it's fairly controversial to have a kind of a sovereignty fund, but, this is what it is inspired by.
What's controversial about it?
Well, the controversial is whether you can bring up such a very large-scale investment with European reach, and who powers it, where does the money come from, and how does it invest? We have a very fragmented situation in Europe, whether we like it or not. It is the case. We don't have the notion of this sovereign European investment. At the present, it does not exist. So it is also controversial in terms of bringing about and how it can come. But so to our point, so we don't have enough equity providers with deep pockets enough. So what have we done about it? We have created with a few member states, not all of them, recently, an initiative called the European Tech Champion Initiative. What is it? It is France, Germany, and a few other member states that came together and said, we're going to set up a very large fund, and we're going to support European funds that have as a target to come to 1 billion and above. There are only 3 or 4 of them in Europe at the moment, and in the States, I don't know how many you can count, but it's over 50, certainly, for sure.
And growing.
Yes, so that's very good. But how did most of these funds invest? Well, they say, well, actually, we're going to trail other lead investors in when we invest in turn. And that's normal, because when you have a public, as public bodies, we have a subsidiarity principle that we need to respect. We can't substitute ourselves to the private sector. And so generally, most of these initiatives are actually tailored as a complement to. But so what we really need here is more lead European investors that actually can imprint the valuation of a company from Series B all the way to Series C and D. That is one. And then the second thing that I hear, and that is very specific for cleantech, is a number of entrepreneurs coming and saying, so I've got my proof of concept, my technology is working, now I want to sell it to a large company, and to do that, I need to raise equity, put the money on an escrow account, and against that escrow account, the bank is going to give me a guarantee so that I can provide a performance bond or an advance payment bond to the industrial client, who is the off-taker, who of course does not want to take the risk on the existence of this small-scale startup in a few years' time, right? So we don't have the right instruments to tackle that particular aspect of the growth phase of a company, and in particular on the debt side of things.
And is that a policy fix? Where do you see that being fixed really quickly? Because I know Dita probably wants to jump
policy
in.
flex in that particular aspect. It's a market instrument flex. One, we need to develop our capital markets, and I'm sorry, it's just a commonplace that I'm going to say. We've been talking about capital market union for a very, very long number of years, but the problem still remains there. the way that our American cousins solve the problem is through the capital markets. Small companies can access the capital markets much more easily than we can inside the EU. So one is develop the capital markets. Two is invent new debt instruments to address these companies. That is what we, the European Investment Bank, together with the European Commission, because we have an incredible partnership on that, are working. And I shall as well, and I shall leave to my colleague from Breakthrough the opportunity to talk about it. We also have a number of smart partnerships with like-minded institutions like Breakthrough and the Gates Foundation to try to tackle the problem more on an ad hoc basis.
Kirsten, really quick, you
Maybe
want
we
to
can
comment?
just do a couple of builds, because I fundamentally agree with you, and I think actually in the letter report, the recommendation that Europe sets up something like the state of Delaware, the 26th state, 27th, I think.
28th.
Well, it depends.
28th
whether you consider that,
jurisdiction.
yes, who's in the 28th. So would actually really constitute a move. I know we've discussed it for so long, but it's time to do it. I think two other elements. We are talking about climate.
Right.
That means we are talking about high capex, very often high capex, long, slow development, low road to profitability. The cash return cycles do not look like rapid spin up 10 to 20x returns on digital tech that the market has become used to. It's like heroin addictions. So climate tech is super difficult to fit into that profile. There are major issues with literacy on what it actually means to understand these kinds of technologies, especially if you're not only playing a substitution game on simply take high emission coal and replace it with solar. So there are really complex questions around literacy, capability, understanding on both sides. But the other thing is Europe has a risk appetite that is amongst the most conservative in the world. We do not have private investors who understand, like in the US, where you go and sit down and say, what are you pitching me? And the first question is, how many failures have you had? And if you can list at least 5 failures, you are immediately likely to be in the money, because what it means is you've learned. In Europe, we have a notion that learning is somehow all about learning from success. If there is learning from failure, not so good. If you haven't got a proven model, very hard to invest. And that means that everything we have in the first of a kind category, which is much as what we actually need into major public projects, is super difficult to fund. So there are cultural elements, and they, I think, inform the slowness of policy reform. But of course, the single market is one major shift.
Quick question before we go to Ditte, because I think this is overdue. High capex climate tech. Some examples for the audience. What are you thinking about?
Well,
Am I thinking small modular reactor?
One of the organizations that I'm proud to say was one of Climate Kick's original startups, Climeworks.
Yeah.
It's just picked up, so now at 765 or 7, I think, in terms of capital raise.
Direct
But
air
that's-
capture.
Yeah, direct air capture, but that is 13 years.
Yep.
That's a very long, slow, steady, and it's one solution. It doesn't change the industry. This is the other biggest problem. We are not doing this systemically, so you don't have the mutually reinforcing loops to spin the whole lot a lot faster.
But just to address that point in your particular question, there are a lot of companies that develop solutions that require industrial application.
Yes.
And so think about industrial heat, for example, okay? So you can have a solution that works on a small scale, but if you want to deploy it and you want to, say, power a beer producer with an industrial solution for long-term heat storage through a different technology, so not fossil fuel, any process you're going to plug that solution to is going to require at least 100 to 150 million euro capex.
Right.
And who do you ask that from? From companies that have raised 10, 20, 30 million euros in equity. So they can't leverage themselves to actually swallow that capex first. That's the problem that we have. And indeed, I totally agree. There is a problem associated with the fact that this is an infrastructure type return on a company that still offers a technology risk profile, which sometimes is triggering investors to more caution because they don't necessarily understand the technology. So you're talking about taking a technology type risk with an infrastructure type return. That is a problem for the climate and the clean tech in particular.
Yeah, and so before we go to you, Ditte, I do want to respond to the kind of grass is always greener on the other side in the U.S. because I mean, I worked on IRA at IIJA, and I visited a bunch of projects this summer, and it's really hard to build infrastructure, even if you have self-activating policy like IRA tax credit, even if you have, first of a kind through third of a kind funding, and a lot of the investment in new tech are actually balance sheets investment, right? They don't have innovative financial structure. They're off the balance sheets of companies who can afford it. Tech, oil and gas, as an example. So I do want to kind of, caution here that in the U.S., people struggle as well. But Ditte, I think we have heard a couple of things. Number one, European Sovereignty Fund, but also number two, EU Innovation Fund. Is it too complex for companies to apply? I think it has seen really successful rounds, really interesting, diverse technology applications. But give us your perspective on what we've heard.
Thank you very much. A lot of good points have been made. So just let me pick up on a couple of them. The first one is simplification, and that simplification both when it comes to seeking funding, but it's simplification more broadly. As I mentioned in my opening remarks, we have built a very ambitious and clear regulatory framework, but sometimes it becomes complicated. And so I think that reducing the complexity, making sure that we simplify, whether it is the number of pages you have to fill in to apply for a fund, or whether it's the fact that you think you have to apply for 3 or 4 different funds, and every single fund has a number of pages. And so there's a lot of room for simplification that can help trigger innovation, that can facilitate finance, and that can help these investments take place, whether that is in the fund itself and what are the requirements, but also how many different funds and how do you access, do you have to open a new door and fill in a new set of forms every time. So simplification is very, very high on the political agenda. Every single incoming commissioner, the commissioners designate of the new commission that will take up their job in just a few weeks, every single one of them has been asked to simplify. And so we, as the services of the Commission, on the regulatory side, on the legislative side, on the policy side, are really looking at what can be done to simplify, and that's very much in the financial sphere as well. So the Innovation Fund, as you said, has had a very successful couple of rounds. There's been a lot of good projects identified from there. So I don't want to, the Innovation Fund is not the problem, but the problem is different processes, different funds, and how to get them to work together. Then we have this question of whether it's a sovereign fund or not. I don't think I will comment on that. I think there is a more general, I think it's important to identify the problem before we start designing the solution. And we can see that some of the problems is simply the lack of venture capital in Europe. It is not there. Now, there are different ways of going about it. I think the risk readiness, as was also pointed to, but again, the risk perception. There is a tendency to overestimate the risk involved in investment into green technologies, into energy. And so if we can get a more precise risk assessment, including from the risk rating agencies, they probably lived 10 years ago when we had not yet agreed to transition away from fossil fuels, when we had not yet agreed to triple renewables by 2030, we had not yet agreed to double energy efficiency improvements by 2030. And so let us make sure that our risk assessment is more precise. Let us make sure that the risk rating agencies work in 2024 and look towards 2030 and 2040 and 2050. These investments will take place. They have to take place. So the risk cannot be what it was perceived to be just a few years ago. There's a real shift there. And then again, in terms of the risk, and that's about the risk perception.
Right.
To get that right. And then if you have a more precise risk assessment and risk perception, that should help facilitate some investments. And then again, on the government side, on the policy side, on the regulatory side, we can help further reduce the risk either by the regulation, by setting clear requirements, or where necessary by guarantee instruments, by public funding as seed money, which is again one of the things we have been working on with the European Investment Bank in this really, really close partnership. So I think we have, with the help also of the Draghi report and the Letta report, identified a lot of the obstacles, a lot of the challenges, and we know the direction of the solutions. We need to roll them out very, very quickly because we don't have time to wait for these things to develop.
And one question, and Kirsten, I see you want to respond. I think One question that I have is also, what's the role of member states in this? We don't have member states on this panel, but I know that there have been direct interventions in climate projects from member state governments to take on long lead equipment risk or permitting risk, right? So I don't want to underestimate that. Oh, if we just get capital flowing, we'll get these projects, because I think that is too optimistic. But Kirsten, you want to respond, and then I want to hear from all of you.
Just an addition, because I very much agree with you that framing Europe's challenges in comparison with the US having sorted out is dangerous, because I don't think the US has it sorted out, and especially on a couple of these elements. I think there are two elements that I notice we could do a lot more with. One is on really pulling into play the insurance industry and insurance mechanisms, which are just not moving fast enough. And one of the interesting comparisons I have lived through is having worked for years in Northern Hemisphere insurance and then moving to Southern Hemisphere insurance, where the insurers are completely vertically integrated, so they are directly engaged in the market of solutions, which goes straight to the bottom line with a positive benefit. And I think there are real opportunities in Europe to think about how do we speed up risk perception advantaged by some insurance mechanisms. And the larger perspective I would take around that is the cost of not calculating in climate risk. As soon as you take a counterfactual perspective, take the cost of the flood in Slovenia, it's 16% of GDP. Take what we will calculate out from Valencia and the next storms to come this week already. We just cannot afford that much percentage of GDP every year, year on year, in every place in Europe. As soon as you take that perspective, risk perception starts to change significantly. I think starting to get that into the market, but the challenge here is exactly what you're naming. It's a relationship between type of capital, type of investment, type of outcome. We are talking about needing to blend together not just a venture capitalized financialization logic, but a real economy infrastructural
yes.
build. And that is a different way of thinking about financial mobilization.
Yeah, and I do want to go to your point on learning, right? You said we learn only from success, but even when we think about climate policy and investment and incentive policy, we have to think about learning. Does this work? Is this enough to get the project over the line? If not, can we tweak the policy? And I think that's actually where Europe is ahead of the US, because in the US, we don't know when we can get the next update or even the next funding, right? So I think that's where European Union is much better. But Jean-Christophe, you want to...
Just wanted to simply bounce back on this specific point you're making on insurance. It's absolutely true. I have to say, we lend around 70 billion euros a year inside the EU, so not a small amount. The number of cases, including on non-recourse finance, the number of cases where I see touching points with insurance companies, 1, 2 a year, if that, and it's a problem in its own. But I think the European Commission is is also participating to regulatory efforts to be coming to incentivize or to be for insurance companies to be able to invest more into also in the equity and the startup for it to be less penalizing. The problem that we will still have is that the rating agencies have got to follow course as well, because if the regulation says one thing, but you know that you're going to be penalized down the line by the rating agencies because the portfolio that you are running in your balance sheet is 10% of your balance sheet, and you don't have therefore the trust of the investors, whatever the regulation says, it is going to be a problem. Just a small parenthesis on the insurance sector.
And I want to zoom out again. We talked a lot about Europe-specific challenges, which I appreciate in the current context is really, really important. And, of course, where we're here right now. But where we also here right now is COP29, the finance COP. So from the three of you, I'd like to hear a little bit more. It's just day 2. Feels like, is it day 3 maybe? Maybe it's day 3. Day 3. For me, it feels like day 14, but fine. What are you hoping to get out of COP29, or what are you hoping to see as an outcome of COP29, specifically related to finance?
Well, I think the key objective of all of us here is to make sure that there is an agreement on the new collective quantifiable goal, taking off from the 100 billion floor, And we have already seen some very encouraging statements from the multilateral development banks. We have heard encouraging statements from the private sector. And so that is a must. That is what we must deliver here over the coming 2 weeks, over the coming 10 days. The reason that is so important is that this financing aspect, the investment aspect, is absolutely critical for us to make the investments globally, and here I'm not talking the European Union, but globally, so that we can come back on track to respect the Paris objective of 1.5, and so that we can make the investments that are necessary for the tripling of renewables, doubling of energy efficiency, not for the sake of energy efficiency or renewable energy, but because renewable energy and energy efficiency and clean technologies are essential for meeting our climate goals and therefore existential for the planet. So that agreement on the NCQG is really at the center of our efforts and work here, so that we can lift the good outcome of COP28 from the paper and make it a reality over the coming years.
Yeah.
Difficult to.
And my apologies.
And
sorry, I
Ditte
will have to
unfortunately
go
has
to the
to
next,
scoot
my
in
apologies.
classic COP manner, so let's applause for her. Thank you. Thank you very much.
So I'll pick up your question from the perspective of a front office person in a public bank. I hope to get from this COP validation for the concept that we are about to float, which is that I would like the EIB to become active in providing guarantees and counter guarantees for the cleantech sector in Europe, to specifically solve that issue of companies having proof of concept and coming to industrial scale application and having difficulty financing this large Capex investment. So, an instance like this one in COP is really fantastic, because you can actually meet quite a number of people to talk about these concepts and see whether they're flying or not. But at first sight, I think if we can get a bit of traction behind this idea and see a number of possible use cases for it, we won't have lost our time.
So what needs to happen? Whose support do you need for this?
Actually, when you bring up an initiative like this, you want to make sure that it addresses an effective market need, and that you're not inventing a need out there, and that you're not coming with a superfluous initiative. There are already quite a number of initiatives out there, to be honest, so we don't want to add one more without traction. So last year we came up with a new guarantee instrument for the wind sector in Europe, and that got very good feedback, and we have got very good take-up in the market. So now we are trying to emulate the same type of approach for the clean tech. So I'm looking forward to continuing market validation through the COP process.
What examples of clean tech are there for you?
Well, let's take one of the examples that we have done with our friends and partners from Breakthrough Energy and the Catalyst partnership. Right, long-term energy storage for industrial application. We have two companies now that we have co-financed together. One is called Rondo, that is coming with a storage solution for high temperature heat for industrial application, up to 7 to 8 hours, based on brick technology. And the other one is the Energy Dome, which is a molten salt core technology. So liquid salt at high temperature that can retrofit that energy to industrial applications. Now these guys now are really in the process. Once now the technology has been validated, and we have done so through equity finance and venture debt finance, they are now in the process of deploying it to their industrial clients. But they are facing that particular wall I was explaining about, access to very high Capex volumes, financing for very high Capex volumes. And so that is a typical application, and it's not exclusive in terms of sectors, but that is the sweet spot of what we want to develop on.
Any contenders in the carbon capture space, fission, nuclear fission, fusion, small modular reactors?
At present, from what I know of our own pipeline, not. We are starting to get approaches and discussions with small modular reactor companies, so small scale companies and innovative companies in that field. It's still early days, no real applications. carbon capture storage is at present remarkably absent from the types of projects that we have financed so far, but the market is starting to move as well. Potential for securitization of future voluntary carbon credits is coming to age, but you probably need to give it another COP before we can really talk about concrete solutions here.
Because, Dita talked about tripling renewables, doubling energy efficiency, but we just came from more countries added to tripling nuclear and the carbon management challenge, which has dozens of countries on it too. So appreciate this and appreciate your interest. Kirsten, before we move to our next panel, your take on what would you like to see from COP29 and your vision for the future?
Well, I have a very long list of what I'd love to see from COP29 and 30 and 31 and so on. I think top of that is embedded in the importance of this COP is the recognition, whether tacit or explicit, that if we do not solve for inequality and distributional justice in the way in which we act and get finance flowing, we are never going to solve for climate. And as climate change and biodiversity and pollution combine and have effects, the social and political and economic instability of those effects will just really close down our capacity to act at any scale. So I think this question really at the heart of it is, and I would double down very much on this question, it is not about making gifts or charity gifts. This is actually about giving humanity a level playing field enough to have a chance to get finance flowing where it needs to flow. So I think that's really essential. Actually remembering that is at what is at stake is something I really hope that this COP manages to hang on to. I think there is a concern that I, again, really welcome the opportunity when we are here to work every single conversation around. One is exactly what was literally just enunciated. We are in overshoot already. So we are not talking about hanging on to 1.5. We are talking about how the hell we get back towards it and what that's going to take, which requires really understanding how do you finance when you're not just talking about meeting kind of asymptotically a goal, you're talking about clawback. Very, very significant gains and kind of exponential leaps forward. So that means we need finance to start thinking in terms of positive tipping points, much, much more explicit understanding of where, when you get investment and policy and kind of capital absorption capabilities happening together, you get really fast positive exponential curves. We've seen that in offshore wind, we've seen it in solar, we are seeing it in small spots, but we need to join it up. A third element on my list is we keep having conversations where we use the combination of words climate and finance or green and tech. We are in a world where all finance is going to have to invest in sustainability, prosperity within planetary boundaries. And I think the fact that we keep putting it in this subsidiarity, this subcategory of mainstream finance continues to perpetuate exactly the same trap. We need to start really kind of reframing and reversing. I think the last thing probably is this is full again of evidence that subnational action taken by cities and regions is moving forward way faster. We need to get out of the problem of a financialized economy in the global north and get much deeper and harder into real economy scaling, which is exactly why this problem of, particularly in the public domain, projects that are not ready for existing infrastructure financing but too late for venture capital, in that kind of messy middle gap, we've absolutely got to start getting real economy absorption and demand connected to the supply of ideas. And that is, it's happening at a subnational level. So the more that we can create instruments that give more agility and speed to public actors to move, to try instruments they may not be used to, and that means investing in capability and capacity and literacy on both sides, because very often public and private finance are just not talking to each other in that kind of subnational context.
Yeah, and I really, last question, but I can't help myself but ask. You said level playing field globally, but the cost of capital, the varying cost of capital for energy and clean energy projects, let's take Africa, only has the best resources in the world for solar, only 2% installed capacity, only 2% investments going there. And our team looked at granular country-specific cost of capital data, and actually what we're finding is much higher than what actually rating agencies, multilateral institutions are assuming for energy projects. So to that, what would you answer?
It really comes back to this question of risk perception. And absolutely, ratings agencies are living in a galaxy far, far away that we left behind decades ago. There is a real mismatch in understanding a level of updatedness on what's happening, and risk perception is completely out of whack. So every single opportunity we have here to change that perception and to start pointing to success stories, evidence of positive investment and rapid returns by investing in Global South, for example, we need to do.
And on that, just maybe to try to certainly end on a positive note, you are right. And ever since we have the European Investment Bank through EIB Global is also active outside of the borders of the EU. And what we have systematically seen is that no investor will even consider a project outside in low to middle income countries, and particularly in lower income countries, if the IRR is not at least double digit. At least double digit for anything, right? They don't even start looking otherwise. So there's this risk perception. What can we do about it? It's a very complex issue, but let's hope that the era of transparency that we live through more and more will help. And one of the efforts us, the European Investment Bank, together with our multilateral development banks, are trying now to promote is to give transparency on the effective risks that we have incurred over the past years and publish, and for the whole world to know about what effective risks are, not perceived risks, right? What are the probabilities of default that we have seen on the various projects that we have financed? And what you see invariably is that the effective risks are much lower than the perceived risks. And certainly currently, both currently and at the inception stage where we perform the investment. So hopefully we can also there use modern technology to actually create more transparency to decrease that perception, in particular towards the Global South.
Maybe one example of that, because it's just along the row here, where you have policy in maneuvers or moves like what the Italian government has been setting up with an explicit offering to invest in symbiosis between Italian regions and African regions and cities, where there is a really clear understanding that this is a codependency on which we all collectively benefit from, and there creates the rails for a much, much more real risk assessment, effective risk, but also something that is much more about mutual transformation that has mutual benefit. It's a public financing instrument, so it's not yet conditioning private finance, but that is often establishing conditionality for private finance to learn.
Oh, all right. Well, Kirsten and Jean-Christophe, I just want to thank you. This was some real talk here at COP, really honest perspective. In some instances, pretty critical of what's happening in Europe right now. But I think you're innovative. You have good ideas. You have a great set of stakeholders with you. So I just wanted to thank you both for what you're doing and your honesty on this panel. And I think we're having a next panel come up right away. Thank you very much.
Thank you, everyone.
Yep. Thank you. All right. As I promised, we have a next panel that is now focused on, please come up, the global perspective. And please join me on the stage. I hope everyone can come up. We're pretty informal here at COP. I think. And Suli? There you are. Okay. All right. So I am personally really, really excited for this next panel because we actually have some global perspectives here. We have with us, I'll start with you, Alberto. Alberto Toril Castro, who's Manager Europe at Breakthrough Energy for the power sector. And I think you recently joined Breakthrough, is that right?
It's been already a couple of years ago, more than 2 years ago.
2 years ago, okay. And then we have Marie Dagentre, who's the head of ESG data and transformation at BNP Paribas. And then we have with us Rosana de Santos, Diretora Executiva do Instituto E Plus Transição Energética from Brazil. And last but not least, Suliba, who leads climate strategy at Leapfrog Investments. And so this panel is actually really, really exciting because we're going to go from COP29 and from what's happening in Europe between the two of you to COP30, to what we're expecting there. And then, of course, we're also going to take a look at private equity and scaling solutions in Africa and emerging markets. So let's get started here. Maybe, Alberto, since you got a couple of references right away from Jean-Christophe already about the exciting partnerships, you can give us a little bit of perspective on what does Breakthrough Energy actually do? I mean, you fund NGOs like us, but you also help companies and invest in companies. What are some of the solutions you're investing in?
Perfect. Thank you very much, and it is a pleasure to be here with you today. There's a lot that has been already discussed, right? But making a step back and taking a glimpse of, that's right, of what we do at Breakthrough Energy, let me say that a few of the elements that were in the discussion were part of our DNA here. Starting by the concept of the 3S, speed, scale, and simplicity, right? We talk about policy measures to help on reducing risks for private capital to flow in. We talk about how fast we need to act when it comes to filling up those applications for the innovators. We talk about how the scale has to go up for our venture funds and our private equity to be able to go into bigger tickets and being able to jump into the growth phase. So that's part of the DNA of what we bring to the table. So Breakthrough Energy, it is a group of climate scientists, policy thinkers, investors, and innovators that we are working hand in hand to reduce the cost of what we call the green premium, so the green technologies, to at least be able to compete face to face to what it is the brown alternative we have nowadays, right? And we do that by focusing especially on two KPIs. So our main KPIs is CO2 equivalent global emissions reductions. So we invest in companies and projects and research that at scale are able to reduce at least 1% of global CO2 emissions. That's half a gigaton KPI. But the second measure is actually an economic KPI. That is that green premium, that is the overcost of these technologies when we compare to those that are already at commercial stage in the market, right? So to address that, and we feel that once that green premium is reduced already, then technologies will be able to scale up because they will be able to attract capital at normal in the normal markets and from the commercial banks and from the infrastructure funds. So we work alongside the value chains with different type of capital providing mechanisms. So some of them are philanthropic, some of them are private. So, but we try to adapt them to the needs that we understood from working on field with innovators that they need to scale up on each maturity stage, right? So we act at the research and development phase with a non-dilutive program called Fellows, where we provide not only that grant support for, again, research and innovators that haven't raised more than 2 million, but are mostly at universities and research centers, and they are looking for the first baby steps pre-venture to be able to raise capital in the venture space. So the key of that step in the ladder, it's only about the dilutive funding, but it is as well the bold support that we provide through mentorship and getting that reverse engineering from what the market needs and being able to help them building up those business cases so they're able to go to the market and start discussing and talking with the venture fund. Second part is the venture capital arm. I will not say much of that. We raised 4 rounds up to now, 4 billion, and we invested so far in 110 startups across what we call the 5 grand challenges, and that is related to the type of technology that we focus on. All of them are related to the way that the human being behaves nowadays, and therefore it has an impact. So it is the transportation sector, it is the electricity sector, it is the manufacturing, how we build things up, it is the buildings, and it is the agriculture sector, right? So we have solutions across the spectrum of those 5 grand challenges. The key here is the patient capital and the size of it. And I will just finish up. And not
No, I have another question for you.
Please,
so
please.
You finish up, and then
So
I'll ask you.
I would say that the second value of the third step in the ladder where Jean-Christophe was mentioning on our EU Catalyst collaboration is pretty much tapping into the project finance space. I mean, what happened with these first of a kind and pilots are coming into the field, and we're actually the green premiums that they see because it has not been standardized, because it's the first time. There are many processes that are not tailored up to attract private capital from, let's say, standard capital market. So we work with them on providing support in different ways. So we have 1.5 fund that we raise on that part. Half of it goes for grant for projects. The other half goes for flexible equity. And I would say flexible here because we already heard about the IRR necessities from majority of standard stakeholders, not recurrent double digit. In that case, we are not focusing on the IRR side of things, but we are focusing on how we can support, on getting that project off the ground as a first of a kind, right? And we combine that with the EIB venture debt. So this is where the blended finance mechanism help on the risk in some of these projects. And this is a first of a kind itself collaboration between the private and the public sector, right? That, of course, I mean, it's part of that connection in the ladder, right? So again, it is a funnel of acceleration where we are seeing needs connecting from the very early stage to the commercialization phase of technologies.
And so you do Breakthrough Energy is active in the US and in Europe, and where else in the world?
So we were funded by Bill Gates in 2015, in
Right.
2021 in Paris. So majority of our teams are based out of the US. We have our offices in Seattle, but as well Washington DC and Washington, where the different teams are working. But as well, we have a team in Europe and another one in Singapore, where we are working across the globe. I haven't mentioned the importance of policy. So out of the 140 people that work in Breakthrough Energy, I would say nearly 40 people we are working specifically for policy advocacy and regulation, where again, being able to get that regulation fit for purpose and as well working on the market side for being able to track good revenues for the clean technologies as very part of the equation of how to scale and grow the solutions here.
Great, wonderful. Thank you very much. And I want to go to you, Marie, next, because then we can stay in the European context and then we'll go global. But you have specific products in that relate to this context particularly, and I think that's kind of what you wanted to talk about a little bit. So please tell us more.
Yes, so perhaps let's start with let's give you an overview of what BNP Paribas is doing when it comes to transition in general. So we are really fully committed to a transition to a net zero economy, and this we do with two main levers. We align our portfolio with the net zero objectives, and we engage with our clients to support them in this journey as well, because if our clients are not net zero, we will never be net zero.
So is that kind of an advisory capacity?
Yeah,
Is that
exactly. And in 2021, we created a low carbon transition group, which is exactly that, what you mentioned, a group of experts, expert bankers who advise the clients, be it on M&A, debt advisory, on their transition. So we focus on three main sectors: clean energy, sustainable mobility, so which includes batteries, etc., and new decarbonization technologies like hydrogen or CCUS. We have more than 100 bankers working on this specific group. So beyond that, we as well support innovation for the ecological transition and all those green techs through different means. So the one aspect is that we have different pockets within the bank investing in green technologies. So typically we have a dedicated investment line of where we invested 250 million euro in green techs in 12 innovative companies. So just to give you an example, we invested in a company called Carbon Works, which does carbon capture and recovery through microalgae. So just an example. We have also launched a fund with the Solar Impulse Foundation, a fund called BNPP Solar Impulse Fund, which will raise 150 million euros. And we invested in several startups again. So to give you an example, in 2023, we invested in HelloWatt, which helps reduce the carbon footprint through the energy renovation of homes. We invested in on another aspect of climate. We invested in Naturmetrics, which is a startup monitoring biodiversity through eDNA technology. So that's what we do. We have as well another envelope, which is an impact investment envelope. And in this specific envelope, we invested in an agri-tech platform called Clim, which supports the farmers for a transition towards regenerative and decarbonized agriculture.
What is the size of some of these envelopes or investments? Like, what scale are we looking at?
So, as I said, in total, it's 200 million euro.
Annually? Or
No, I mean the total envelope.
Okay.
Yeah. And perhaps just to finish, we as well advise those cleantechs. So typically we do capital raising. So we do IPO. We have done the IPO of Life, which is a pure hydrogen player. And to finish, perhaps we have put in place within CIB, so our corporate investment bank, and in some commercial banks, a dedicated setup to cover those green techs, to make sure we provide them with the right services, the right product to accompany them in their growth. Perhaps a last point, in some instances, we do some partnerships as well with some startups. So typically, in Turkey, our bank in Turkey called TEB did a partnership with a startup called Plan A, which measures the CO2 emissions of companies. And this company typically helped our clients in Turkey in the textile and automotive sector to monitor their emissions and help them reduce those emissions. So to conclude, we have a large, wide range of product and services to accompany those startups. So,
yeah, thank you, Marie. And I think it's really interesting to just hear how kind of this traditional expertise, capital expertise, is now being transferred, and especially the emergence of low carbon solutions businesses across the private sector. So thank you so much for giving us this overview. But I want to go to you, Sully, because before I'm sorry, you have to share microphones. But when we were meeting before the panel, right, you made something really fascinating. You said something really fascinating that helped structure the conversation in my head. You said, in the lab, we're talking technology. But then if we want to go to scale, really what we're talking about is business. And so I would love to get, and for the audience, to hear your specific perspective of how that applies in the emerging market context and in the context of Leapfrog investments that you are leading climate strategy in.
Thank you. And I think, let me just tell you a couple of things about Leapfrog. So Leapfrog is an impact investment firm, and our mission is to drive prosperity while driving at the same time a low carbon world. And when we have a conversation earlier, when we talk about first of a kind in technology, the reality is that our role is to figure out, once you have all these exciting technologies, what needs to be done so that actually becomes an integral part of people's lives, whether you're in Senegal, in India, or even in Europe, right? How do you take it from the lab, from the first of a kind, to being something you consume and use every day? And what's required is two things. There's financial innovation and there's business model innovation, right? Maybe let me just bring this to life for a second. So let's use something as simple as e-mobility. We all agree that a pathway to decarbonizing transport, a big part of that is electrification of transport, whether it is for cars or two-wheelers. But the big change you have in many of these sectors, when you think about this transition, is you're going from an era of, let's say, moderate upfront capex, but very high running costs. So when you think about the car, you pay some for your car upfront, but every you pay a lot for petrol and maintenance, to an era where you're going to have a very high upfront capex, you pay a lot more for the car upfront, but on a running basis, your running cost is lower. And a big change, whether it is in renewable energy or mobility, is that how do you go from a high upfront capex world, low upfront capex world, to a high capex world, and make sure that for the consumer and that company, it is affordable, right? The innovation there has to be find a way to address that high upfront capex, which is a barrier to adoption, and make it digestible for the customer. Like a simple example is 2 3-wheelers in the emerging markets. In India, you have 1/3 of all road emissions come from 2 and 3-wheelers. There are 250 million of them. Now, the challenge is we all know the end is electrification, but there's high upfront costs.
Is the end electrification?
Oh,
there's a disagreement on the panel.
2 3-wheelers,
okay.
right? So 2 3-wheelers have a lower levelized total cost of ownership over the life cycle of that vehicle in India. But the key is even with this lower total cost of ownership and lowers emissions, the challenge is you have a high upfront cost. So where does the business model innovation come to play? Well, if you take the battery out of the vehicle, the battery represents 40% of the cost of a 2 or 3-wheeler. Suddenly, instead of paying $1,000 to go electric, you're paying $600. And that $600 upfront cost is lower than the cost of a combustion engine. So you have removed the barrier to adoption. And number 2, by having a battery swapping network where in under 2 minutes you can swap your batteries and it costs you 70 cents per swap, that means two things. You don't have to worry about range, you don't have to worry about downtime. So you address upfront cost, you address low running cost, you address downtime, and you address access to charging. Those are the innovations. This is not tech innovation, that's a business model innovation that unleashes demand and makes it useful for the customer. For us, success is when somebody goes to a low carbon solution, not because they necessarily care about the planet, but just because it's a no-brainer for them. So as an investor, what we look for is that intersection, low carbon and a no-brainer for the customer, but it requires backing businesses, entrepreneurs to do that.
Yeah, thank you so much for this perspective, which I think is quite innovative, if not almost controversial with some, because I think there is this notion, well, we have to be, we have to buy greener products. When we fly, we have to buy the offsets. We should be buying an EV, even though, as you're saying, we might not have access to the infrastructure, or it might be inconvenient, right? It's pretty convenient to have a normal internal combustion engine car. So I really appreciate this new framing that if we want to see adoption of green tech, particularly, we have to make it in a way that A, they can afford it, and B, it actually has to contribute to essentially comfort and be as smooth as what we're used to. So that, I think, is a framing that I haven't heard so far at this COP, so I appreciate this. But
Can I add
yes,
one kind of thing?
yes, please go ahead.
There's this old saying that you catch more flies with honey than vinegar.
Yes.
And that's the essence of what you need to do, right? People bought Tesla not because it was a compelling experience, right? So for us, it's about how do you create that honey to get people to gravitate.
Right, and some customers might actually, look to Chinese EVs to have an even better experience now. So, Rosanna, you were actually shaking your head, so I'm very curious about this. But, Brazil hosted the G20 this year, hosted Clean Energy Ministerial, has a lot of innovative fuels projects happening in Brazil, as well as key innovative technologies, plus is also an oil and gas producer. So tell us, as we're looking to COP30 from COP29, what are you hoping to take away from here, and what were you shaking your head about?
I don't know if I want to answer that. Anyhow, thank you for the question. First, let me say one thing before I start answering. I was hearing, she's not here anymore, but I was hearing something about risks and how to incorporate risk analysis into financing, cost of financing and everything. And she mentioned two examples, Valencia and I can't recall the other one. But what it's even worse is that in the South, at least South America, where we are very, very low resilient to climate change. So in my country, only this year, we had a severe drought in the Amazon River. And it's kind of lack of water, what is unimaginable. And also in the south of the country, floods that flooded the capital of one of the most industrialized states in Brazil. For more than 1 month, they had 2 meters of water within the city. So it's a lot of money that we lost there, a lot of industrial and revenue, and there will be impact in our country revenue, country GDP. So going to your questions, it's just a matter that this is happening everywhere. And for countries with average income, each earthquake like this one really shakes our economy and our ability to do better and do more. And this has also to do with our presidency in the G20 and BRICS, because we will be also hold the presidency for the BRICS next year, which has a lot to do with bioeconomy and bioenergy. Why is that? Because I saw in this panel, sorry about that. I saw in this panel that a lot we discussed on new technologies, like groundbreaking technologies, like futuristic technologies. Where are we going? And what I see is that we should be discussing those technologies, hydrogen. There are a number of questions as an engineer that I don't understand. But anyhow, hydrogen or batteries or salt batteries, I don't know. But there are a number of technologies they are ready to go and they are decarbonized.
Which ones are those?
For example, biofuels, sustainable biofuels. I'm not telling
What's a
Deforestation.
sustainable biofuel?
no deforestation, jobs well created, jobs that are respected, using the land, not deforesting anything else, even using degraded land to produce some kind of biofuels. So we have to insert in our equation, the decarbonization equation that all the globe is trying to solve. We have to insert other kinds of technologies. So I only hear financing to very edge technologies, and the low-hanging fruits are just standing there, and they are usually technologies that are accessible to the global south, that are developed in the global south, that are typical to us, because we do have land, we have sun, we have wind, we have all the minerals. I'm seeing my colleague there, Lucila, she's the director for Vale, which is this one of the largest iron ore producers in the world. So we do have everything. Why on earth are we just talking about technology of the future and not doing things that we can do right now? And this is why I was shaking my hand here, because electrical vehicles, I do believe that electrical vehicles, they are the solution for many places in the world. For São Paulo, where I live, electrical vehicles are the solution because we have local pollution. But I do believe also that lithium mining is not to be taken for granted. Recycling this whole thing, circular economy, is not to be taken for granted. All the grid reinforcements that we need in a country that has 4,500 kilometers from north to south, from east to west, all the grid reinforcement, who is going to pay for that? And I think we have to have a combination between EVs in some places and hybrid vehicles on ethanol and batteries in other places, so that we can optimize the good technology that we already have, all the jobs that are created by this biofuel industry and bioenergy industry. And just to give you another example, we keep telling on the steel industry, the decarbonization path, the preferred decarbonization path that everybody talks is about hydrogen. Yes, I do understand that hydrogen in the future may be they want to go. But are there other ways to get there? Yes, there are.
For example?
For medium-sized steel-making companies, biochar, instead of just putting the biochar there, use the biochar as a decarbonizing element. So not mineral coal, not coal, biochar. For medium-sized, it makes sense. Biomethane. Instead of using biogas and then in the same facility you go and use hydrogen in the future, you use biomethane. We do have biomethane already. It's already a technology that is there, so we can speed up what we can do. So this is what I mean by looking technologies in a more neutral way and not only financing certain technologies that are very fancy and very hype. This is what I meant.
So I know everyone wants to comment, because I think we're actually peeling back the layer of the onion on a disagreement, right? Does everyone have to go through the same solutions, or do different constellations of countries go and use the solution that is most suitable to the infrastructure and the resources and the land use footprint that is needed within their national boundaries? I think this is a really, really important conversation. So I just want a really quick and a lightning answer. Do you think that this is going to be on the table in Brazil at COP30?
Definitely.
I mean, you said the most important thing, right? They're chairing the BRICS as well, and BRICS have agree on climate outcome, but have a very different idea about solutions and how these solutions should be put forward to different countries.
Lightning answer, yes, definitely. Already during the G20, Brazil inserted the bioeconomy and bioenergy and the discussion there. I'm pretty sure that this will be the discussion from now on. And on top of it, another discussion is that we have to rethink global supply chains, so that we can bring either the final product or intermediate product closer to where renewables and the resources are. So, for example, instead of producing the entire steel making in Europe, We export some kind of intermediate material with a lot of green molecules inserted there. So, and she's much more expert on that than I am. So I learned from her. So quick answer, yes, definitely yes.
So, quick answer from the whole panel, because I know everyone wants to chime in.
I will build on that. Actually, I really agree with your statement. I think there are two key concepts, right? Which is when we talk about business, we always talk about product to market fit, right? It's about market segmentation. So within Brazil, even within India, some places will use CNG and we use something else. So it's always talking about once you have the technology and the set of options, which one has the right product market fit. So that's why business is really important. Number two is this idea of time value of carbon. Yes, there are great technologies that might be great in 10, 15 years, but every solution we can apply today and scale has benefits to the planet for the next 15 years. So let's not delay solving the problem today because it has a compounding effect. So I agree with you.
So are we reframing away from climate perfectionism? Don't build any new infrastructure unless it's 100% decarbonized, and going towards more every piece of emissions reductions count?
I think there are two parts. One is let's actually already scale what works today, right? And just market segment the market, some applications work, deploy it. If it doesn't work, find another solution and a way to finance it. So I think it's more about just being pragmatic in the application, and taking a ton of carbon today is worth a lot more than taking a ton of carbon in 15 years. And I think that should be principle.
Okay, I'm also interested for the panel to build on this, right? How does this relate back to financing? Alberto, you're ready to go?
We normally say, so before really going to what the challenges of the scale brings in, we normally say let's go to the scale of the challenge itself, right? I totally agree. Rosanna, can you hear me? Yeah. I totally agree with what you are saying, but I think sometimes we try to or we have an static view of the technologies on the different applications when we start discussing this adaptability in the market, right? We are talking sometimes, about technologies, or when we are specifically talking about emerging technologies, would have applicability, some of them at different paces and at different years in time. But totally honest with you, the ones that we have already right now, we need to work on deploying it the fast that we can. And it is the role of coming back to the conversation of the financiers, when it comes to mature technologies, thankfully, the private capital normally flows with a different pace to what it is things that are not in the market yet, right? So, to your question and to your point, things that are already deployable today, we need to go fast. And we need to use the private muscle, the private financial muscle that we have available in the market to do that, right? Now, we need to understand as well when I was talking about the scale of the challenge, that, in terms of, some of these technologies will not be able to just solve the problem at scale. They will be able to solve the problem in the next few years. But if we want to go at the scale of the global challenge that we have for climate crisis, sometimes yes, but the reality is sometimes no, and we need to work with new technologies. to be able to do that. So it's it's not one or the other, but it's everything that has to be. And of course, depending on the geographies, depending on the pace of the decarbonization itself, different technologies will have to be prioritized or not. So I totally agree with what you are saying.
Marie, do you want to, especially prioritization, is that something that factors into your low carbon solutions business?
Yeah, so perhaps, clearly on our side, on BNP Paribas, we support all those innovative technologies like hydrogen, CCUS, etc. But we really see the challenge. It's not at scale, etc. So it's really, it's a long-term investment, if I can say so. And I think in parallel, it's key to focus on, as you said, low-hanging fruits. And I would like to mention as well energy efficiency, because I think energy efficiency is one of the low-hanging fruit on which we really need to work on, because of course the energy which is not consumed is the best one. So that's the last point I wanted to make on this.
Great. So I think we're running up against time. I just wanted to check, are there any questions in the audience? I guess we're doing a good job answering questions already up here, so that's wonderful. But we shifted the outlook to COP30, so I have two questions, lightning round, all panelists. Number one, what are you hoping to see out of COP29? Really, one key takeaway. It's now day 3. Rosanna showed me earlier, not day 14. And then the second one, at COP30, what would you like to see on the agenda related to climate finance or any other topic? So, Alberto, you're up. So lightning round.
I'll pick two. So apart from what we know that would be at the table and the discussion, I'm going to pick the bottom of what Jacques Staulalou was saying. So that transformation, the type of public finance that we are getting through. Let's talk more about guarantees and the risking mechanisms and allocation mechanisms for risks rather than the way that we've been deploying public capital up to now. That will be one takeaway. Second takeaway, or for COP next year, it is more focused on the electricity infrastructure. What it needs actually to ramp up investments and to do smarter investments in terms of getting the electricity grids out of the ground.
Marie?
Perhaps on my side, I would focus. I think one of our key expectation is on the blended finance part. I mean, public-private partnership, and we are working on new innovative financing mechanism in partnership with MDB. So I guess that's our strong focus.
Rosanna?
For COP29 on financing, we discussing not only about volumes of money that we have to, but also how to apply this money in a more efficient way. As this was also something from the previous panel. And for COP30, I hope that we start discussing Scope 3. We start discussing that we should rethink how we are producing things around the globe, because the way we are, there will not be any green premium enough to pay for the way we produce things today. Our supply chains are unsustainable. The way we are flying goods around the globe is unsustainable. So it's kind of reviewing some of the concepts of globalization. This is my wish, together with bioeconomy.
Sorry, I have to ask follow-up questions. So reviewing concept of globalization, so more to kind of industrial policy, the shift that we're seeing in the US, but also in Europe?
Also in Europe and also in the rest of the world, because this is actually just transition. When you move development only from the traditional ones, the usual suspects, and you move industrial development to other localities, because it is less emission, from emissions point of view, you emit less when you move your industrial policy to your industrial plants to other places. Then also you bring development, you bring quality jobs, and this is actually going towards equality in the world. So, and towards equality with a market-based way of doing things.
And how does this relate to cost, right? Because there's this tension. We want to create kind of more local manufacturing, but on the other hand, China right now is providing, going back to EVs, 60% of global EVs at a much more competitive price point than other EVs, right? So it's a question that keeps me up at night.
So do I. So if we get globally to the conclusion that the way we are doing things today has to be reviewed, what we are proposing as IPLUS is during COP, we sign something that we are calling the Belém Consensus to review a little bit the Washington Consensus from '89. So reviewing based on just transition with the concept that I just brought, and also from emissions point of view. So if we are successful, during the COP in Belém, we're going to have something signed by everybody saying that we have to review this, and this will be the Belém Consensus. Who knows?
Okay, Belém Consensus, follow up on Washington Consensus. This is the panel of big ideas. Sully, you're up.
For me, there are two things kind of build up on it. Is how do we ensure that actually the global south owns the tool of their destiny, right? So we talked about earlier is how do you bring the tech to the real world? How do you make sure you have solutions developed on the ground, being part of that equation, and that this transition really drives prosperity and people own it? So I think that's one. Number two is quite often the conversation is centered around power generation, and I think we don't spend enough time on actually the demand side of the equation. You know, I know a number of countries that have a high degree of penetration of renewables, but they still have diesel for their transportation. They don't use clean cooking solutions. So how do you address the demand side, which is the harder? What do we need to do for us as individuals to change our behaviors, or to make it compelling to switch, other than just let me bring renewables? I'll just use that for my data centers. But what do I need to do to change how I live, right? So for me, those are the two things. Own your tools of your destiny and address the demand side of the equation.
Quick follow-up on this, Sully. We've had COP27 in Sharm el-Sheikh focus on inclusivity. COP28, again, focus on global south inclusivity. We're now here in Azerbaijan. So do you see progress on owning the tools of your destiny, or is there still this mismatch where, you have advanced economies kind of expecting specific pathways?
I think what's happening, there's just a death of capital that's happening in terms of like scaling up local solutions and businesses. It's beginning to happen. It was the same thing as Lalu mentioned, which is the death of capital of you have a solution, but then in terms of actually getting your first customer and scaling it, there's not enough of that balance sheet. I think it's about mobilizing that capital, and I think that recognition is becoming more evident to some of the participants is a lot more capital to scale growth. Growth is not tech, it is something that works. You need to do more of the same at scale, right? And I think that's not infrastructure money, that's not venture money. And I think that's where we still need to do more work. I think there has been some progress, and I think the more progress you make, the more you realize where the fundamental gap is, and that's where I see a gap today.
All right. One word lightning round, because we had so much fun. How do you feel about COP29 to COP30 climate finance discussion? I feel hopeful. Encouraged?
Yeah, the same, hopeful.
Yeah, hopeful. Instead of or in spite of what happened in the States.
I'm actually hopeful. The truth is we have come a long way. Like, just look at this panel. We have talked about the entire spectrum from breakthrough innovation to how do you scale it in emerging markets, to how do you think about large banks financing it, to how do you make it ownership in the emerging market. You have a whole spectrum together, and I think all of us work with the AIB. So things are actually happening. It's just not in the front page of the press, but you have an ecosystem here.
Lee, I couldn't actually summarize this better. I'm actually personally really inspired by the conversation we had. First, focus on Europe, real talk, focusing on Europe. What does Europe need? So it becomes where innovation goes to grow. And then we talked about from COP29 to COP30, what are the different products, what are the different angles, and honestly, what are the different worldviews on decarbonization, on climate finance, and how we're going to interact in a world that's geopolitically fragmented. So thank you all so much. I had a lot of fun. I enjoyed it. Thank you all for coming and joining us. And we're looking forward to continuing the conversation over the next couple of weeks. Thank you very much. All right. Thank you. This was a little bit different than I think it was.
Yeah, well,
It was good, yeah. Now we know a lot more about. I think, yeah. I don't. Is Andrew? I don't know. It was not in mine. Andrew, are you